Here we are. Welcome back. We enter a new era today. We closed the chapter last month on the Powell FOMCs, and today we set forth on the WARSH. Sadly, we'll have to retire all of our memes, all of our jokes, but there's going to be more jokes, and there'll be more memes, and things will be okay. I'm going to hopefully break down for you what we know about WARSH, maybe what we can expect, what we can be looking for today during the FOMC, and we're going to basically see what happens together. It's going to be a good time. I do appreciate you tuning in here. Before we get started, we have about 30 minutes until the interest rate decision is in. Then at 2:30, Chair WARSH will join us and he will speak. So as we get started, I need you to hit the like button. I need you to subscribe. I need you to hype it up. You can go grab your brews, roll up real quick. You have a few minutes, but we're going to get into this, and I appreciate you tuning in with me. Some of you tuning in every month. And I love you guys. You guys are the best. We're gonna have to come up with a new name for him. Chair WARSH. I don't know. We'll see what fits. I don't want to force anything. I want it to be organic. I want to really find where WARSH fits. So a lot of you may not know, but this is actually WARSH's return to the Fed. WARSH had a 4-year stint at the Fed, actually under Bush. At the age of 35, he was actually one of the youngest governors on the Fed board ever. He served under Ben Bernanke during the global financial crisis, and I think we can honestly infer maybe some trauma maybe that put on him, a little bit of like, I don't know where his mind's at least when he was last in the Fed. Some kind of crazy times. He played a significant role in the crisis response, including the Bear Stearns JP Morgan deal, the AIG bailout. Guys, I was like not old enough to know what any of this was going on, so I've just done a little homework. Goldman Sachs and Morgan Stanley into conversions into holding companies. He's in general known as hawkish, which is in contrast to basically everything Trump has been saying. Trump's objections to Powell. Remember, Trump did put WARSH into this position now, and it seems like he thinks he's going to cut rates, but that doesn't really line up with WARSH's history. He has been talking about reform at the Fed, but that reform meaning, what is it, like a return to just the dual mandate? And I actually am not totally sure what that means. I kind of have this feeling that they're going to look to cut unemployment out of the equation and just look at inflation. But to my knowledge, I think the only thing outside of the dual mandate for the Fed was a more recently added something to do with like making sure minorities were represented in employment factors and figures, something like that. And so if it's just a return to the dual mandate, that might mean just specifically cutting that out. I'm going to have to get fact checked on that by somebody. Somebody can help me out. Reform agenda. He's criticized the Fed for mission creep, meaning like adding more to their plate than just focusing on inflation and unemployment. He does strongly favor gradually shrinking the Fed's large balance sheet, meaning quantitative tightening. Again, hawkish. There's really no dovish kind of sign here or direction here without kind of mental gymnastics or just totally rewriting the way things are done. We can get into that, but not quite yet. He was critical of the 2020 shift to a flexible average inflation target, a fiat. He prefers the stricter 2% target and suggested rethinking how inflation is measured to include productivity and AI, which honestly kind of sounds like a vague statement to me. It doesn't really, you can throw that out, but you need to have like a pathway to that. You can't just say, oh, we're going to factor AI. What does that mean? What does factor AI mean? So hopefully we're going to hear a little bit from him on all of these. He's skeptical of the Fed's communication, we'll say history. Powell was very repetitious. He was very selective in his word choice. He used forward guidance often, kind of indicating what the Fed is doing now, but what they plan to be doing in different times. So him being critical of that and skeptical of like the heavy communication, he says that truth seeking is more important than repetition, which, I mean, I guess we're always truth seeking. I don't know exactly how that fits in, but that the Fed should avoid previewing decisions, that the Fed basically should avoid forward guidance, which is one of the few tools that they have outside of literal monetary adjustment. So we should expect maybe a more concise, data dependent at this, but how can we get more data dependent? We're always waiting on the data, style of governing. I think it's important to note, though, that while the Fed chair has changed, that really is a symbolic change in many ways. It's a leadership change in many ways. The Fed is a voting board, and it is not the Fed chairman makes the decisions. The Fed chairman certainly can like set the path, set the guidance of policy or whatever for the rest of the members, but it isn't, he's hawkish, so they're going to have to be hawkish. My personal kind of curiosities lie with, I wonder if the dot plot, if that tool will be utilized under WARSH, if he'll change it, if maybe he won't utilize it quite as much, because as you guys know, the dot plot being a great tool, I think, that the Fed has given us pretty much every FOMC, we've been updated on it, is basically a forward guidance tool. It's not just showing us what they're looking at now, it's showing us what they're looking at in 3 months, in a year, in 2 years, in 3 years. And that basically by definition is that like Fed previewing their decisions in the future. What else do we have today? I think today, another big important thing that is likely to get grilled on and will impact everything going forward. Today's just going to be huge, guys. It really is going to be historic. Every FOMC is the biggest ever, but today is going to be historic. Like the last time we had a new Fed chair was Powell. How many years ago? Like 10 years ago. A crazy amount of time. A crazy amount of time has passed. So I don't have any familiarity with this switch, and I'm kind of along with the ride for you as well. But I think his tone on independence, he's likely to get grilled on it, on Fed independence and how important it is, because this is what I was, a little bit of what I was leaning towards when I said something big would have to change when it comes to looking for interest rate cuts, but maybe factoring out unemployment or anything else other than inflation. Fed independence has been a topic really just in the last year. I don't really remember it being called into question much pre-Trump term 2. But he's definitely going to get asked questions about his stance on it, how he feels. And man, we're really going to find out. Love him or hate him, Powell was an adult. Sounds crazy. He was an adult in the room who made unfun, uncool decisions that people didn't like. He made them under the guidance of the Fed doing the best thing they can do for the economy under their own kind of like concept of fiscal policy in the world. I don't really know the words for this right now, but they did the best that they thought that they could do. And it's going to be interesting because if Fed independence is going to be called into question and WARSH doesn't defend it, we may see kind of a shift of this boring, bland, doing the unfun thing, but dependable and consistent that we've seen from the Fed. And honestly, that can be a huge shakeup. There is nothing off the table in my mind. The way I think it will go down is that WARSH will get lots of kind of the normal welcome-y questions that you would expect. No interest rate decision will happen. He won't lay out future interest rate decision kind of thoughts yet. He'll likely just say we're sticking to the data. Maybe he'll define a little bit of the changes that he wants to see in the Fed. I think that would be a great way to start. It's really just anything can happen here. It's really exciting. With Powell, we knew what was going to happen. We were able to call what he was going to do on this channel following the FOMCs almost perfectly over the years. If you go back and watch, we called almost every change. When everyone was yelling cuts, we were saying, no, it's not going to happen until October. We didn't get cuts until 6 months later in October. Like, Powell was such an easy call, Mark, right? It was just so easy to predict, in my opinion. And with WARSH coming in, I have no idea, and it's likely that no one has any idea. And that alone might be enough just to mix up markets and make things kind of crazy. I'm not going to lie. It's going to be is going to be nice. He's likely to get comments on the balance sheet, quantitative tightening, and easing. That was a big topic over the last few years, that we hadn't seen much easing at all. Powell stuck it into the end there, did not make changes, didn't want to risk his legacy in the last half of his chairmanship. Likely going to ask for an assessment of inflation persistence, and if he signals openness, obviously, to rate cuts or hikes. Any hints about changes in communication style, which I already went over, that including forward guidance in the dot plot. Those are pretty much the only two kind of communication style, forward thinking, forward leaning tools. And then, of course, how I'm just almost reiterating here, and how he plans to handle the dual mandate versus a narrower price stability focus. WARSH does bring deep experience. Like I said, he was already at the Fed. He was here under Bernanke during the financial crisis, and that is invaluable experience. The man is definitely qualified, in my opinion, for this position. I'm looking forward to going through with this today with you guys and just listening to the commentary, breaking him down, and just getting a fresh take on the Fed. Things have been pretty stale. They've been pretty stale. Interest has waned a little bit with Powell really not making any changes in the latter half of his term there. And man, what have I missed? Have I missed anything? He sees interest rates as a primary policy tool, which it is. What do we got? His little background, maybe he's worked at all the big financials. He served, actually, before his stint at the Fed, he was the special assistant to the president for economic policy, executive secretary of the National Economic Council. He handled domestic finance, capital markets, banking regulation, and issues like Sarbanes-Oxley Act. He served as the White House liaison to the FDIC, CFTC, and the SEC. He worked at Morgan Stanley in mergers and acquisitions as an associate, and then vice president and executive director. So this man has done it. He's done it all. Obviously has the educational background. And I think after that, yeah, he's been vetted by the oligarchy. Exactly. The richest of rich have deemed him okay. Deemed him all right. But here we go. Oh, man. That's a nice little warm-up. So we have 15 minutes until the interest rate decision comes in, and what we have in front of us is our typical Federal Open Market Committee FOMC chart. We can add more equities, more things onto this as we go if we deem it fit. On this chart, we have the start of the stream, which has already happened. The next dotted line will be at 2 o'clock, and that will be when the interest rate decision will be published. For some reason, they publish these to news outlets before they just make the announcement to everyone. But we're going to look for that together. I put about a 99.9% chance nothing's going to happen there. That's really not the exciting point today. The exciting point will come 30 minutes later at 2:30 when Chairman WARSH himself will speak for the first time. I'm excited. I know you're excited. Guys, I need you. Hype it up. Hit the like buttons. This is another historic day coming in. We had the SpaceX IPO on Friday, which was crazy. And now here we go. A new era of the Fed. This what can I say? This is going to be crazy. I can't even play the Chirp House song anymore, which is really sad. Maybe I can have it edited to say Chairman WARSH. Just the same song. Nah, I won't do that. Let's go. Let's go, Justin. Party time, boys. It's party time. I want you to also vote in the poll. It's kind of early to actually vote in the poll. Maybe until we hear them speak. Who's going to be better, Powell or Chairman WARSH? I don't know, man. Time will tell. Maybe a little warning to you guys. Typically, I don't suggest trading on these events. Today, obviously, same thing. Volatility during the FOMC can be crazy. We tend to see basically price reverse almost on everything when the interest rate decision comes out. And then by the time Powell has spoken, or at this case, WARSH speaks, we tend to see it just reverse again and everybody gets stopped out or liquidated. And it's just not a great time. So we try to make these a little bit more entertaining to maybe beat that itch, keep that urge away. There's going to be plenty of time to trade tomorrow. Don't worry. There are some things we should probably look at before we get into it, as we have a few minutes. SpaceX having not the best day. SpaceX reaching 225 on Tuesday, trading down today, pre-FOMC to 186. Remember on Monday I was saying opening trades into the FOMC this week is probably a crazy idea. Well, probably was. A little bit of recovery here from that 186 back up to 200, kind of just flirting with it. I think what we're going to find is a lot of markets are just trading sideways into this. Like, look at the dollar, completely sideways over the last few hours here, just wading into the FOMC. Bitcoin, pretty much the same thing. A little bit of a rally in the morning that topped out at about noon, so it's been about 2 hours, and we're just seeing sideways trading. Same with the NASDAQ. Everything is really just looking sideways. What about gold? Did we tell you gold? Gold maybe being the exception. Gold having a bit of a run, a bit of a pumperoon. Maybe off of the rumors and the assumption that WARSH is going to be hawkish. I think that is the assumption. It's weird, though. I don't understand how Trump was going to be, hate Powell and just blame everything on Powell, blah, 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 and then nominate someone who's likely to do this, like, to be more hawkish. I don't think Powell was that hawkish. Like, in the overall world of hawkish and dovish, like, his stance wasn't to be hawkish. It was more like, well, we'll be hawkish when the data tells us to be hawkish, and we'll be dovish when the data tells us to be dovish. But WARSH seems more in the line of, like, we've been too dovish for too long kind of thing. Like, we need to like make a precedent. We need to push back on like what we've done, which seems like hyper hawkish. I don't know. That's where the question of like the independence of the Fed may come in today, and kind of just some other stranger questions. But maybe gold pumping off of that right now. I wouldn't get super excited. This has been a few days coming. Guys were asking me on Monday what I thought about gold. Nothing's changed there for me, honestly. I think gold's looking for a lower high around 4,500. I think it's going to paint that lower high and then seek back down to like 4,000. I don't think gold is going to have a super great Q2. That's where I'm at. Doesn't mean I don't think gold will never rally again or go to all-time highs again. Certainly could happen this year. But, man, you got to break this downtrend on gold before you start getting anything. Oil also taking a dump. We should just run through some charts here. Oil broke past April's low, I guess, on the war being over again for the 50th or 60th or whatever time we're on. It's over again. We've won, thank goodness. And oil taking a dump here, heading to that 67 level, man. All the way back in February when we saw this break out, we were like, I'll look at it again at 67 as a buy. There we are, coming back. Oil down to 74. Taking a big dump, having broken market structure. I think we might be somewhere near the like 200-day moving average. There we go. Just below the 200-day moving average. I didn't actually expect that. Damn. Below the 200-day moving average, I don't know. That's not looking too strong here. Even a bounce on oil, say this market reverses today and kind of rallies into the end of the week, I would expect maybe it to revisit 82, previous support, find resistance there. Maybe follow a similar track as gold. Looking for that lower high, looking to continue that downward move. The dollar actually not making too much move here. I'm watching the dollar. That's my bet. My bet is the dollar will have the spiciest move here today. It's a ballsy bet. That isn't often the case. Here we go. We're getting closer. 9 minutes. 9 minutos. What's up, my boys? Who's here? What's up, dead man inside? How you doing? Trev over there on TikTok. Psycho Savage, my dude's Cryptoverse, shared the live. Thank you. Thank you, brother. Yo, yo, yo. No matter what platform you are on today watching, I appreciate you being here for this historic moment. It's just hella historic. I do not know the next time that we will have a new Fed chair. That could be, I mean, it certainly won't be for 4 years. But that could be, man, like Powell was, when did Powell start? Was it 2016? What years was he in? Oh, it was 18 to 26. All right, so actually, it was only 8 years. Whoa, only 8 years. Could be another 8 years, right? This is a historic time. What's up, everybody on Instagram? I see some viewers over there. Hello, hello. on Facebook. Hello over there. TikTok, YouTube. What's up, boys? How are you feeling? Best way to watch the FOMC. Oh, by the way, Gina may have left us years ago at this point, but last FOMC, there was a contender. Keep your eyes peeled in the audience and in the questions. For a new Gina, you never know. When we need her the most, she will return. That's what the prophecy said. The prophecy that I made up right now. We need her the most. There's some interesting polymarket-ish betting prediction market bets going on. I don't know. Fed interest rate decision in July. 92% still looking at no change. I think that is probably it. How many Fed cuts in 2026? Only 22% chance of one cut being priced in here on these prediction markets. A 42% chance of a hike in 26. That's the one I'm watching. That's the one I'm watching here. Dang. Wait, now it's down. Why does it say 62% if now it's down? I don't understand these sites sometimes. The way they, 42. It was up as high as 62. Fed decision in September, no change. I think September is the likely time. I think we're going to see a cut or a hike. I don't think we're going to see a cut. Maybe these prediction markets should sponsor us. Give me money for showing them. But they're interesting. I don't know. What value do they have? Probably not very much. But I think they're interesting. New Gina candles. Gina makes all the big green candles. Speaking of being big green candles, Bitcoin seeing a little bit of a rally here into the publishing of this decision. The dollar is slightly curving down. I mean, ever so slightly. NASDAQ up a little bit. What's up, Charles? How are you, Charles? We're pumping. Let's go. What's my favorite quick draw LLM? I don't know. Quick draw? Like Mid-Journey? I don't know. No one can ever replace Gina, but we can always make room in our hearts. They should only allow female interviewers. I agree. What's up, Ace of Hearts? Who else is here? We got like a few minutes. What are you guys feeling? I see Ace of Hearts is here. ATW. Charles, Chris Goss, Cole Atkins, Crypto Doc Arg, Crypto Stevo, Cyan Ryan, Dark Side, David B, my boy. Echo Leaf, my thyroid is fine today. I've been doing thyroid exercises. It's very healthy. What's up, Folsom Hodel God, GQX, Sam Harlan. What's up? I'm your Huckleberry Ivan Dev. How are you? John Doe, Justine Banks, Chris Pax, my guy. Welcome back, Chris Pax. Lasers Go Pew, Marco Strategies, Money Sean, My Way Out, Nimoy, Paulo Boyle, Philly Skills, President Ronald Grump. I actually watched the Trump G7 summit thing, and he was weirdly like less crazy than usual, except for yelling about bombing stuff the whole time. But in between yelling about bombing stuff, he was I'd say like more kind of coherent and focused than I usually see when he speaks. What's up, Roberts? Ross Smith, Shuckle God, Saint Airway B, Stay Blessed 69, nice. What's up, Sin, Troy, Tillin, my guy, V Solves. Who else is here? We got everybody. He had his McDonald's, probably. He has McDonald's and his like little nap. He's probably feeling better. You locked yourself out of the apartment. We'll pray for you. What's up, my friends? Fed Connect. Is this a Bitcoin only channel, or do we like XRP and other things? We're not a Bitcoin only channel. We're a trade and markets channel. I'm a Bitcoin guy, but we cover everything. We've been covering SpaceX a lot. We've covered gold a lot over the last year. Covered oil a good amount over the last year. The crypto market has been rather crappy. So we've been looking at some other stuff lately. Hood making a move. Hood enjoying that $25,000 minimum day tradey regulation being repealed. Hood heading for 110. That's a huge trade, dude. Holy. I didn't realize it was a 65% trade when we placed that back in April. That's bonkers. 110. I don't have too much more confidence it's going to go more than that, but I feel like at this point, if you don't reject at 110, you're just going back to all-time high on Hood. SpaceX is the big weird one. The hype on this channel for SpaceX on Friday was unbelievable. And then Monday came along, and it's just like almost none of those same people were around. It was really weird. This is very strange. We could definitely still talk about pecans, and we can still shut the front door. WARSH is going to drop rates to 0 just to effort. Honestly, I think WARSH would be more likely to do the opposite. I think WARSH would be more likely to raise interest rates just right off the bat and F everyone. I don't think that that's going to happen. The odds of that, I think, are close to 0. I think that there is like a 99+% chance nothing changes today. That's okay, though. Today is just the beginning of a new era. It's the fresh first taste of what's to come. It's going to be good. We're all going to be here together. We're all going to figure it out. It's going to be a good time. That's why you're here. That's why I'm here. We're going to do it together, baby. I am staying alive, George. Yeah, you know, I'm trying. I'm trying to stay alive. Leave my thyroid out of it. I don't have tonsils. I got them taken out. Got them removed long ago. Worst pain ever in my life, getting my tonsils removed. But worth it because, man, my tonsils were sabotaging me. Can't find value on SpaceX. It's hard to say that SpaceX is worth more than Microsoft. It's hard to say that. It's hard to say that it's worth that much with its revenues being like, I don't even know, like breaking, like making a profit. We'll see. We'll see. Your crypto's doing great. Not sure what I'm watching. Supervillain, what are you only watching hype? Is it like you're just watching hype? Yeah, you were looking at Zora last time, says the history. Hype is doing all right. Hype is interestingly maybe looking to break all-time high again. I don't know. We don't have very much time, so I'm not going to jump into this chart too in depth, but Hype traded to all-time highs again yesterday. Almost again today. It's a pretty crazy chart. Pretty crazy chart. At all-time highs versus Bitcoin as well. It is what it is. All right, guys. We have just seconds until the interest rate decision is in. I need everybody to open up a tab. Google it, whatever. Get on Forex Factory. Get on whatever is your choice of site. And I want you to put the interest rate decision in the chat with a source. Let's see who can do it first. You got to put a source, though. You don't put a source, you don't get points. SpaceX's Elon exit scamming. It is like almost the exact pump and dump playbook for crypto coins. You can ask Claude. Sure, Foxy. We have 10 seconds until this interest rate decision is in. Coming in hot right now. Coming in real hot. Curveball. Woo. NASDAQ. Nice red candle. Green candle on the dollar. I called it. I said the dollar was going to be the spiciest. Spicy little 1 minute candle on the dollar. Bitcoin giving back some of the gains it made in the last 5 minutes. The dollar pumping. No interest rate change. We knew that was coming. But apparently markets were not so expecting that. I don't know. The dollar now up considerably in just seconds from no change. No change at all. And the dollar looking to make some big moves. Let's throw this onto the seconds chart. Look at this. 99.6 to 99.9. Dollar knocking on that 100 door. Look at that big, beautiful green candle. It makes me jealous. We used to get these back in Bitcoin in my day. Now we just get them on the dollar during the FOMC. Look at the dollar pumping and tech moving down. Let's check in on SpaceX. What are you doing? Not on like really no reaction there, honestly, on SpaceX. Sure. The dollar having quite a move here. Now tapped at 100. Let's zoom out. What are we doing? The dollar now up 0.4% today. God, when the dollar moves, it's so boring. But that was a big candle. Look at that candle. Sheesh. That's crazy. This is what we're in it for. Dollar just ripping. Absolutely ripping. Bitcoin down marginally. Marginally, let's say. 1% down. NASDAQ down 0.5%. What else we got here? Gold taking a knee for some reason on the strength of the dollar, down almost an entire percent in the last 5 minutes. Down almost an entire percent in 1 minute. Whew. This is actually pretty spicy. For nothing happening interest rate wise, that's pretty spicy. I was thinking it'd be much chiller. But like I said, today, there's so many new factors. So many pieces of this puzzle are moving again. Take a dab? I'll take one with you. No, don't unsubscribe. There's just so many questions. So many things can change today. We have known the Fed to be this like boring, consistent operator that makes unfun decisions. We don't know what that's going to look like in just 20 minutes. In just 20 minutes, we could have a total different idea of how the Fed operates, of what to expect in the next few months. I think it's pretty clear at the moment, markets are looking at a stronger dollar, potentially putting some downside pressure on equities. We're seeing a pretty uniform sell-off here, pretty uniform downward motion on equities, on gold, on what else we got? What's moving down? What's the big one? WARSH. What's moving? You guys are saying tech is down. Is it? Should we look at our tech favorites? Wow, gold. Gold taking the knee. ScanDisk. For some reason I always like mess up the ticker for ScanDisk and the name. That must be it. So I say the name wrong, I say the ticker wrong. ScanDisk down from 2100, not really a huge deal yet. Is looking at a second red day potentially. It did take 0.3% down in a 1 minute candle. Markets are not liking this. Markets are hating this. They're thinking, I don't know. But it isn't, again, it's not because there's no interest rate change. That is not the reason. That's not a surprise. No one was thinking there was a hike today anymore. Except for, I don't know, the same people who kept saying, like, Chair Powell was going to be fired every week. And, like people who are, I don't know. People who just write clickbait titles for a job. No one thought that anything really was going to change here. So that's not what it's about. It is about WARSH. It's about WARSH and, I guess, protecting the dollar. Looking for a strong dollar. Man. Did Hood reject? No, Hood's still chilling. What else should we look at? What's going? SPX down? All right. Usually we have SPX up, but I had a NASDAQ up today. Because it includes... Ooh, yeah. Ooh, that is an ugly little candle there. S&P 500 down 0.6% in minutes. In just minutes. 7,437. This was actually a previous... What was this? A previous extension, yeah. Previous extension target that we were looking at, but now seemingly acting also as the gap. S&P reaching down to that 7,437 gap, looking to fill. I wouldn't doubt it if you see a little bit of a bounce there. Remember, by the time Powell speaks, typically all of this motion is reversing. So try not to get caught up in this moment, though. This is kind of fun here. Maybe do get caught up. The dollar is ripping now above 100. Let's go. Bitcoin hating it. Boo. I need green. I need green, not red. Red is bad. I need green. Pump my bags. Maybe Chair WARSH will pump our bags. Ooh, I don't like that on Bitcoin. Gnarly rejection. I'm closing it. Can't look at you right now. Can't look at you right now. Gold gave back all of the gains of today. 100x longs destroyed. It's over. Great Depression, here we come. I mean, we had a great run, though. We had a great run. Do you think so, Stel? What do you think, Bullish Mike? How you doing, brother? Welcome. Chair WARSH. Chair WARSH, is this what you wanted? Is this what you wanted, Chair WARSH? Whew, markets are eating it. Off of no change. No change. Hey. You can't free. No, you can't free Ape Iron. You can't free. 10-year? Sure. What's going on with the 10-year? The 10-year. 10-year gapped up for this. Whoa. 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 10-year yield up quite a bit on that. Give me a second to process that. 10-year yield still far from from the threatening territory. But you would think a strengthening dollar and a hawkish Fed would drive the 10-year down. Doesn't seem to be the case here. I guess we will have to see what he says. We're jumping the gun. 10-year to 5%, absolutely. Absolutely. Yeah, absolutely. We've been waiting for that forever. I can't believe it hasn't happened yet. I don't know, guys. Is WARSH really going to come in and, like, stop inflation? Is that really what he's going to do? I have so many questions, and I hope we get answers today. We are now 20 minutes away from WARSH's speech, where we're finally going to get these answers. We're going to see what maybe the Fed looks like over the next 4 years. 2-year. I mean, the 2-year yield is still showing us a hike. I've been saying we're going to get a hike, and everybody hated it. The 2-year is still showing hikes. It's not showing cuts. It's not showing cuts. I remember when people argue with me on Twitter, and they're like, just because the bond market says the yields are going, it doesn't mean that we won't get cuts. And I was like, all right, buddy, I'm done with this conversation. I'm not going to argue this with you. I'm not gonna do this. Wow, gold actually having the worst response. We're seeing this move start to reverse a little bit, right on time, right on cue, as we said. Typically, by the time Powell speaks, everything is reversed. We're seeing NASDAQ reverse a little bit here, a little green candle over the last 3 minutes. Bitcoin, same. Gold is the only thing continuing the drop. Put up the 5-second chart. All right. Yeah. Yeah. Pure chaos. I need you to hit the likes, subscribe, tap the screen. I need all of the hype today, my friends. It's a historic day, and you have joined us. You've chosen to be here. I need you to hit the like button. I need you to join our fam by subscribing. Jump in our Discord, discord.gg/TomCrown. Sign up with the affiliate links in the video description below to help support the channel. This is the first day. It's the first FOMC in a long era of WARSHs. All of the hikes. Is it a good day to buy, Anna? I mean, that's very... depends. I mean, depends what you're talking about. Might have been a better day than yesterday, but will it be a better day than tomorrow? I don't know. Well, yeah, I have to say Powell, because we don't, it's only reversed when Powell has started speaking. So I can't say it typically reverses when WARSH starts speaking, because that doesn't make sense. I could say when the Fed chair starts speaking. That's a whole mouthful. It's a whole mouthful. Yeah, we are competing with the World Cup today, so I appreciate you tuning in. Hopefully you can dual stream it. You can have the cup on. I can't have the cup on here. I will get sued into oblivion if I broadcast the World Cup. But you can watch it, and you can have this stream up. I appreciate you multitasking. WARSH. WARSH. Semiconductors already bouncing. Everything bouncing except for gold. Gold having the worst. Gold having the worst reaction to this. Very little, virtually no bounce since the decision. I do hate to say it. No, I don't. I was telling everybody Monday, gold's bouncing. I think it could even have some more upside, but I don't think it's going anywhere. Gold broke its structure, took out March's low and bounced. It's like typical liquidity sweep. False move the other direction and continue the move, right? You've eaten away at support. You've failed the high. We're getting ahead of ourselves here. We're still not like in confirmation of that. But the reaction to no interest change is not going well for gold. Gold is not enjoying it. Everything else leveling out here except for the dollar just continuing. Really, the dollar and gold are moving the most inversely correlated right now. Like right off the bat, equities and Bitcoin were like inverse moving, and then they have now moved back, or at least stopped the bleeding momentarily, while gold just continues to fall and the dollar continues to move up. Shifts in shambles. Shift shambles. The FIFA World Cup. Some Judas Priest to be back in 10, Justin. Get it, buddies. You have... Even makes you pay for the World Cup. Yeah, we ain't streaming none of that. We have about 18 minutes until WARSH speaks. Great time to grab a brew, roll up. Great time to, I don't know. I don't know what to expect. I'm nervous. I'm wearing a cheap shirt from Dan Flash's. It's not one of the expensive ones. You can tell because it's the pattern's not that complicated. I don't know what to expect. It just like literally can be anything. Literally anything can happen today. I'm excited. The last few FOMCs were getting really not so spicy because we knew that Powell wasn't going to do anything. Powell was not going to cut rates in the last FOMCs. He was not going to risk his legacy. The legacy he had built over all those years was not about to throw that out the window at the end. And now we don't know. Now it could be all of the above. If you look at the Fed tool, this is for the next meeting in July 29th. You'll be here for that one as well. We have a 12% chance at this point. 88% chance of no hike again, but 12% chance of a hike. That's up from 0 right now, obviously. We're going into September. We see that 12% morph into a 30%. 30% chance by September. Only 2 FOMCs away. 30% by September. You get the 50 BPS hike. Start pricing in. Only 2.5%, but still. This is the message, man. And that's why it's going to be so interesting what he has to say. Because the market analysts are starting to go this way. They're starting to say, not only are cuts off the table, right? Not only are cuts off the table, but hikes are now coming. And when we say hikes, plural, we think that there is a 10% chance of it being next month. The month after that, almost a third. The month after that, we start seeing, okay, maybe there's 2 hikes coming by the end of the year. 6% by October. The last FOMC in December, we see only a 39% chance that nothing has happened, that there's been no interest rate changes under WARSH. A 42% chance, greater than the chance of no change. By the end of the year, for 25 BPS, 15 at 50, 2.4 at 75, and even the outlier, I mean, I think we're going to get there, 0.1% for a 100 BPS increase by the end of the year. You start getting into, let's like say, I don't know, the end of next year, the end of 27, this is a totally different landscape. You see 5%. You're speculating about 5% earlier. The market sees what's in front of it. It's not being fooled. It knows what's coming, and it wants to price it in. That's what it's going to do. 15 minutes. What's up, Matches Schmeed? JPY pairs. JPYs, JPY USDs. Bank of Japan. Bank of Japan increased their interest rates to 1% over the other, in the last 48 hours. Oof. Damn. So this is USD JPY. That's why it hasn't collapsed. If this was JPY USD, it would have been looking like it's collapsing. Back to the highs. Wow. Weak yen, market bully for the yen carry. Strong yen, market not bully. At least for the yen carry trade. That's kind of interesting that JPY gained strength against the dollar. Or am I doing this upside down? Dude, I gotta silence my phone. I keep getting notifications. Hold up. I can't do it. There we go. Hide alerts. Perfect. Perfecto. Everything's about to change. Is anything pumping except USD and bond rates? Probably not. Although SPX, that's a pretty good recovery. SP 500 has recovered pretty well. Off the initial, if I can ever click here. The initial 1% drop, it looks like it's recovered about half of that. Up, 0.58, 0.6. I think this is going to be short-lived. I think by the time WARSH speaks that this may have all reversed. I did warn you guys that's typically what happens into these, why I don't think they're a great idea to trade. The Bank of Japan did raise rates, so we're going to have to raise rates. I don't see how WARSH doesn't have to raise rates. Not today. Obviously not today. We already know that. But I don't see how he doesn't. I have been saying this long before WARSH. Like, I don't see how we don't raise rates. We can't, like, we don't have any of the conditions to cut. The job numbers, whatever, if you believe them or not, even though they're revised constantly, like, job numbers say that jobs are strong, the labor market's resilient. We see inflation numbers showing that inflation is not cooled, that it's heating up on many different indexes or calculations of it. That's hike territory. You don't cut interest rates because inflation is hot and jobs are strong. That's just not what you do. If you do, then you just get crazy inflation. Like, you just usher in inflation. The dollar is exactly 100 right now. Save it. Save it. Take a picture of it. Exactly 100. 100.00. Beautiful round number. Most markets even haven't done anything. Like, oil hasn't moved off that. Japan, Nikkei 225 took a little poop, but it's a really tiny poop. Robinhood is almost back to where it was. No, I mean, it does kind of look like it's just the dollar and it's just bonds. Oh, I guess yeah, just the dollar and just bonds. Mr. Beast bought an island with scratchers. WARSH has said in the past inflation is war related. Dude, it's gonna be interesting. Alex Wells, good to see you, brother. It's gonna be interesting, man. If WARSH, if we walk away from this thinking they're gonna hike or cut, WARSH is gonna have to come up with some crazy shit to say. I'm gonna be real. He's gonna have to say some really crazy stuff. I don't even know what he'll say. We need to look at inflation through the eyes of I don't know, man. What could you even say? We're going to subtract GDP growth from inflation and look for a 2% target. That'd be weird. We're going to look at inflation without energy involved in it or something. What are you going to say that could justify it? Nothing. I don't know. Aliens. DJ, aliens, that's not a bad guess. Aliens could be it. He could say there are aliens and we have to cut interest rates because the aliens are cutting interest rates. And if we don't cut them, then the aliens are going to beat us in freedom. He could say that. He definitely could say that. SpaceX, someone said, look at SpaceX. It's not really doing much. It's sold off with everything else, it looks like. Or it really didn't react to that very well. Didn't really react at all. Just similar. I mean, down a percent or two, just like everything else, back up. I wouldn't be surprised to see SpaceX, at least if we are going to see further dumping, at 183. I mean, the VWAP, the total VWAP of all the trading for SpaceX is sitting right at 183. Something interesting also is when we look at the Tesla SpaceX pair, and we won't spend too much time on this. We look at our SpaceX Tesla pair. Check this out. Check out this bad boy. Our 1618 extension gave us 0.469. On Monday, when we opened into Tuesday, we gapped up starting from that extension. The sell-off today brought us right back to that gap fill. And what happened? We bounced. I would say that SpaceX Tesla pair is probably going to trend back up here. Whether that means Tesla dumps and SpaceX rallies, or they both rally but SpaceX rallies more. I don't know what kind of combination it's going to be, but that is very interesting. That is a perfect fill. For those of you who were skeptical when we put out this pair on Friday, you can't, why would that matter? You can't look at that. There you go. I think that is enough to convince you that this chart has something, right? There's something for it. How we're going to play into that with trading is a harder question. But that's perfect, dude. That's a perfect fill. You gapped, perfect fill, you bounced. And what happened? Price bounced. Still trending. Keeping an eye. Let's flip these back over to 1 minute candles because the 5 minute candles are crazy. They're actually crazy. We are coming up on the first speech from WARSH. The first WARSH speech. How are we feeling? I need you to clock in. How are we feeling? We feeling positive? We feeling negative? We feeling angry we didn't buy in the SpaceX IPO and we would have all made lots of money already? Is that what we're feeling? Are we feeling that? What are we feeling? Let me know. What's up, Caperdie? How are you, brother? If I was in 15,000 of debt and I had 10,000 of gold, it'd take 3 years to pay off. What would I do? 15,000 in debt, 10,000 in gold. It depends on, I mean, what I would do. I can't give you financial advice, but what I would do, it depends on the APR on that debt, APY on that debt. If it's like at 3% debt, let it ride forever. If it's above market, maybe consider paying it. Maybe consider paying it. Damn, David Perry. There we go. David Perry, that's not out of the question. David Perry says he's going to cancel all the reports and Fed meetings, citing Fed talks too much and then make excuses to cut. It's not out of the question, bro. Like I said, there's no reason to make cuts. Doesn't make sense. Like it does not make sense to cut. But you could do some mental gymnastics where you throw the playbooks out the window and you just cut anyway. And that's probably what it would look like. It probably would look like the Fed not doing meetings. It would probably look like the Fed canceling reports, or just using different reports that are just like very weird. Like, you know, just like looking at very specific controlled things to basically use statistics to prove their point, to make the point they want. It would be a very bad look for the Fed. It'd be a very bad look for the Fed. He has only one vote, but Fed independence is being questioned. The Fed isn't independent, then it doesn't matter if they vote. There's a lot. I don't want to get into it. I don't want to do spoilers. Anything can happen here. It's going to be interesting. This shows hope of the independence of the Fed and not one president. I mean, I hope the Fed remains independent. I think it would be very bad right now for the Fed to lose its independence. You might buy SpaceX at 180. I think you got a good chance of bouncing at 180. Yeah, I think if you come on down here, 180 is a nice little spot-a-roon. Maybe we can check in on Tesla quick. I'm still very confused about what happened Friday of last week into Monday. I'm so confused. SpaceX continued pumping, like post-market, like it just like kept going after Friday. The hype Friday was insane. This channel had its like biggest streaming day ever. And then Monday came around and it was just like, it was like 1/10. And in crypto, when we have seen this exact same playbook, typically that hype just keeps building. You know, like the viewerships get bigger and bigger and bigger and bigger and bigger until the bubble bursts. Or at least until like it just is boring. But it never got boring. But the energy just changed. I don't know. I'm not sure. I'll let you know as we continue along if I get any more info on that. It is the altcoin pump and dump playbook, though. You basically you start hyping something up. You release a small percent of the supply. You can pump that number yourself, or that small percent of the supply can be like engineered to outnumber, or for the buyers to outnumber that like small supply. The number goes up. You start saying, look at these huge numbers because only 5% is being traded, but you get to say, look at the giant market cap. But it's like, that doesn't really exist. Huge numbers attracts more people. Those people push the price up. And then what happens? Eventually, there's either unlocks like there are with SpaceX, or the debt, you know, in altcoins and crypto, or the devs just like dump, right? It is the exact same playbook. It's crazy. It's like actually crazy. We've seen this a million times. I have no doubt that SpaceX is a valuable company. I've long said over the years, 7 years live here trading, that if you were to take any random given company in the United States, most of them just don't really have value. They're not really doing anything that every other company couldn't do. They couldn't just step in. With Tesla, they said that. SpaceX, like, they are valuable. But man, this is just weird. It's just weird to see this. I've seen this playbook. I've seen the playbook. 5% of the float's out, and then it's like, what is it? August? It's like 20% unlocks or something. Unlock. Where is it? Post Q2 earnings late July, early August. Insiders can unlock up to 20% of eligible locked shares, an extra 10% if the stock is trading 30% above its initial offering price. Maybe this is the alpha. Where's 30% above? What is 30% above 135? I have a feeling, because 135, like, seemed so low. If you're going to trade at 225 right away, that seems so low. Why did they price it so low? Well, probably because they're looking for it to be trading 30% higher than the IPO price. What's that? 176. I would be looking for 176 to hold going into that earnings. That's what I would say. Crypto scans infiltrated TradFi. Yeah, they did, man. For all of the years, they used to tell us that like crypto would become more like TradFi over time. No, Bitcoin is going to become more like stocks. Nope, stocks became more like Bitcoin, more like crypto. The other way around. We have 1 minute and 20 seconds until WARSH is live. Did I see your comment on Trader TV Live? I did not, Michael Student. No, I didn't. I was like yelling, it's a bigly day. Bigly day. Nah. I did not, but I appreciate you. Appreciate you, my friend. We have just seconds. Seconds to go. Ba 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 ba. Ba 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 ba. Are you ready? Last call. Roll them up. Roll them up. Grab me a brew. I don't have a brew. I'd love a brew. You can grab me a brew. Roll me one up. That'd be great. You got seconds. How big to make it on the vertical stream? There we go. Seconds to go. WARSH is joining us. The dollar still holding on to its little explosion of green after no interest rate decision clocked in. Stocks down, recovered a good bit of what they lost. Gold sold off and traded sideways. Gold looking the worst here. Here we go, 2:30. WARSH will join us any minute now. Maybe he'll be famously late like Powell. Maybe not. I don't know. Here we go. Lock in. Log it in. Stop playing that music. Stop it. There we go. History, ladies and gentlemen. Right now. History being made. Crickets. Go clapping, clap. Clap at home, clap at home.
Good day.
Good day.
It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5 to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people.
Amen.
But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability.
All right.
At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Me first. Questions here. Next time.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall, and hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter.
Gold star.
Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is, what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group.
I called it.
On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
All right. Interesting.
Thank you so much.
I hate what he's saying
New
so
York
far.
Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target.
Her mic is terrible.
And under what circumstances you would support the Fed taking some action and raising rates?
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded
baby.
like
Hikes are coming
encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right.
All of what he
Others
said
have,
is
I'd say,
forward guidance.
different
though.
views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
Everything
So
he
just
said
following
is
up, I
forward
guess, on
guidance,
the
though.
current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, you know, forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say there, Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
Bitcoin recovering, stocks recovering here, dollar sideways.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end
That's
of the
forward
year.
guidance.
And the markets have taken that as forward guidance. So what does
It is
this mean
forward
in
guidance.
terms
That
of
is forward guidance.
how you guide the markets and in terms of what the dot plot's future is?
He said they're
I'm
keeping
going to
it,
have to
but
give you the
that's forward
same
guidance.
answer I gave to Ms. Smith.
Nasdaq
We
is
have a
now
task force
recovered.
for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin WARSH will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly, through using the likes of you. I had a great old mentor named George Shultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Chris Rugaber.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question, so let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do, because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this: almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward.
You can use Polymarket for
Yes,
up-to-date
welcome, Chairman
data.
with Fox Business.
Oh, good.
So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets
Just
are
see
paying
that?
attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying.
So
Was there
does
any
he.
discussion
So does
of a rate
he.
cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
It is kind of the most important FOMC. This is unambiguously.
Claire Jones, Financial
Claire
Times.
Jones. Claire.
Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room.
Oh, thank you, Claire.
One
Thank
might
you.
wonder why
Oh, Claire.
you didn't raise rates today, considering what you're saying here.
Yeah.
About the
Yeah.
risks to
Yeah.
US inflation and your mandate.
Yes.
I guess why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And
Off
to the
to bed
point of the
now,
question
Claire.
I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical
Task force
central
drink.
bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price
Dialectic.
stability objective.
Just a quick follow-up on
Oh,
your
Claire,
markets point. If you look at
yes.
two-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the two-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm
Oh,
not going to offer any
you
commentary on
scoundrel,
market reaction
Claire.
over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Task force is the new data.
Brian Chung with NBC News. Thank you for taking our
WARSH?
questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go.
Fed
so
say less.
For the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there. And it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the President since you're swearing in?
So on the President, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed Chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Bessent to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve Leisman, CNBC. Mr. Chair, thank you. Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation. GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick.
Thank you. Nick Timmeros with Wall Street Journal. Chairman WARSH, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten, or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Drink. He said task force. Drink. I feel like it's their new data. He's just going to keep
Mr.
saying
Chairman.
it's a task force.
It
It's a
sounded
task
like
force.
on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words,
In a different
much
word,
of this
yes.
data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay. Thanks. The other question I wanted
I'm
to
not
ask
sure
is
you answered anything.
related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that.
No
I don't think
laughter?
I'm breaking any news, but
No
in my
laughter?
view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance,
Ooh,
is there
don't you
anything that
dare.
we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria. Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what would the expectations for inflation being higher and also potentially growth being
Blair
slower?
Jones.
So, my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Okay.
For the last question.
No.
Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function and tell us a little bit about the kind of conditions that you think when the Fed should respond?
I like that guy.
It's going to be a very unsatisfactory answer to the final question.
Yeah, different last question
The
then.
Federal Reserve
God, their mics are bad.
has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through in part because of inflation in the last 5 years are in the rear view mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Mr. Chairman, we've had strong labour data in recent months. How would you sum up the labour market right now? Do you see
Dude,
it
his mic is
stable,
terrible.
Potentially a source of inflation. Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Okay. He should drop the mic and go, and we're hiking rates. And we're hiking rates. Drop it. It'll just be over. That was historic. That may have been the most important FOMC of our lives. I know it didn't feel that way. I know it felt unsatisfying. I know. I watched it with you. There was no Ginas. The questions were lame. It seems like we're just going to hear the word task force now. Instead of like, well, we're waiting for, we don't have the data. It's going to be like, the task force, we're waiting for the task force. It really does seem that way. But there was a commitment to change at the Fed. That is big. That is big. I found some interesting things. Obviously, I'm going to have to dissect this later. But here's my first thoughts. One, the dollar is loving this. The dollar is beefing. The dollar has been only up, and that makes sense. Every single thing that WARSH said was hawkish. It pointed towards stricter fiscal policy. None of it led to height or to cuts. None of it was in the quantitative easing field. None of it makes sense. Equities down, NASDAQ down, Bitcoin down, gold down. Makes sense. Strengthening dollar. There were some things here, though. It felt weird to me, the amount of emphasis put on AI. Now, I get it. AI is the buzzword. Everybody loves it. But repackage this. What if he had been doing that as, like, instead of saying AI, he'd been saying crypto? It would have felt weird. It would have been weird. It's like, hey, man, I love that you're talking about crypto, especially people invested in it. Sure, people invested in AI. I love it. He's talking about AI. We would have loved that. But it would have been weird. It's like, okay, acknowledging something, it could be important. But the emphasis on it seemed out of proportion. I think we all can agree that AI going forward is going to have a greater impact on everything we do, obviously. LLMs in their current iteration, I don't think warrant a whole fifth of the task force. I don't think it does in this iteration. General AI going forward, GAI in the next decades, certainly I think is up there. But I don't think the LLM iteration that we're seeing is warranting of a fifth of this new task, one of the 5 task forces. It's weird. Another thing that hit me in a weird way, he kept saying there isn't going to be forward guidance. But then everything he said largely was forward guidance about how the Fed's going to operate, forward guidance about the task forces and these things. And like, I mean, maybe we'll have to wait for the next FOMC to kind of really understand that. But the big thing for me was, okay, we're not going to do forward guidance, but we are going to continue doing the dot plot. The dot plot is forward guidance. The dot plot is forward guidance. He said he's not going to weigh in on the dot plot, which honestly is just, I think is kind of strange. I don't know why. It honestly does feel like almost like maybe politically motivated. I don't want to go that far, but like I'm not sure what the logic is there then outside of it. It's weird. It's strange. Perhaps today was just the warm up, and today will be different from the future FOMCs going forward, and that's okay, and we're going to be here for it. I appreciate you tuning in for it, even though it wasn't satisfying. Well, as satisfying as maybe we wanted. The new drinking game is every time he says task force, we're going to be under the table in the first 10 minutes. I appreciate you tuning in. We did make history for the second time in just a few days here. That's what we do on this channel. We make history, and you're a part of it. Make sure you're subscribed. Join our fam in the Discord. Discord.gg/TomCrown. It's free. Sign up with the partners in the video description below, including our sponsors, BYD-Fi, FEMX, and others. Make sure you've liked. We're going to be live again Friday at the latest. Whew. Lot to digest here. I got a lot of homework to do. I almost have to just rewatch his entire note speech, honestly. Chat Force, go. Check out, go ahead. Check out Chris Pax's stream. He's a good dude. Appreciate you, Chris Pax. Smash the likes. Tune in. Clock in. Chairman WARSH. In the house now.